So Bitcoin is compressing, but the macro narrative has exploded. Michael Saylor highlights insane future Bitcoin targets, whilst Thailand has implemented 0% capital gains tax on Bitcoin. Governments are adjusting policy, corporations are doubling down. Now, this is while price is still trying to find support. However, the long-term race is accelerating. So is this the phase before a parabolic rise, or does further bearish momentum continue? In this video, I'm going to break down the following: the key resistance Bitcoin must break, why this compression phase actually matters, the liquidity setup forming right now, and the trade setups I'm also preparing. If you want real-time entries, stop losses, updates, and trade management, make sure you're subscribed and join the free Telegram below for all of the execution and frequent updates. Remember, the moves do not wait. It's up to you to capitalize. This is Bitcoin on Point. Let's dive into the content. Now, we're going to go back to our macro outlook for today, where the Bitcoin long-term game is getting louder. Michael Saylor just said Bitcoin could reach $20 trillion in 4 to 8 years and $200 trillion in 20 years. Now, this isn't a short-term trader talking. This is a capital allocator thinking in decades. And then he added something even more important: the US should own it. This is evidently a sovereign race narrative, right? Now, zooming out further, Thailand just implemented that 0% capital gains tax on Bitcoin and crypto. This is policy alignment. It's adoption at government level. So countries are not banning Bitcoin, they're actually integrating it. Now, back to Saylor, and he also dropped this: as long as Bitcoin goes up 1.25% a year, we can pay the dividend forever. If it stops going up, we've got 80 years to figure that out. This is extreme conviction. You know, we're talking balance sheet confidence. Now, while short-term charts show resistance and compression, the macro is showing nations adjusting policy, governments competing, and corporations doubling down. So the short-term might be noisy, right? But the longer term is getting clearer by the day. And when macro conviction builds quietly, that's usually before structural expansion begins. And with that in mind, we're going to take it into the technicals and we're going to study Bitcoin on the 2-week chart. And we was discussing this fractal yesterday and looking at some similarities and differences between Bitcoin in 2021 and Bitcoin in 2025. Now, if we resort back to 2021 in a little more detail, you'll note that we had these sort of compression phases, markups, markdowns, we had a double top, and we also had this higher low formation that was building. Now, eventually we did mark a third tap and lower high of resistance before entering a full-on blown bear market. So that was 2021. Now, if you look at 2025, the similarities are strikingly uncanny. We have, again, a double top. We have 2 lows to mark a potential higher low formation. And then we've had the third point of contact, which was a lower high followed by depreciation. So far, we are respecting the exact structure from 2021. Now, the question is whether, again, Bitcoin respects the weekly order block we've been discussing at sort of 60K. Right? We have the wick low of 60K from early February. If Bitcoin can respect this low and consolidate in this range, that might mark the actual low before looking for that further expansion back to higher targets. However, if we do sort of repeat 2021, then we might be at the phase now where we're actually looking for that last sort of sweep. So you could sort of say that Bitcoin might be at this sort of low where we was in sort of June 2022. We may see a few weeks of relief, before that continued rejection. This is how 2021 played out. We had an A, B, C, marked a low, few weeks of relief, and then we continued to mark a new low. In 2025, we've had an A, B, C sort of structure. If we build a consolidation phase but fail to take out sort of 72K, then this is where things get ugly, and Bitcoin could follow suit, like 2021, and actually push down to sort of 50K. That's a target we've been analyzing on the channel, right? So if it does get any more ugly, then that's where that further extension could follow suit with how we did in 2021. We're simply in a reactive zone, right? We need to watch and wait for the structure to unfold. If 60 to 70K holds, the low could already be in, right? This is how serious it is. However, if that's lost, it does open the possibilities of sweeping to sort of 50k from the lows back in August of 2024. So this is a critical inflection point. But you can see the similarities and how the structure is actually unfolding. Now, we're going to take this into Bitcoin on the daily time frame. And this is where our short-term imminent resistance lives. Now, the current level sits between 68 to 69k. There's also a level above as well for now. But focusing on what's in front of us, what we're actually looking for here is a potential short-term rally up to this descending resistance. Now, we covered this descending resistance in yesterday's video. And we've actually been under this since early February, so roughly around a few weeks. And every time Bitcoin's come up to make a point of contact on this resistance line, it's just continuously being rejected. Now, we did have a recent point of contact, which was on Wednesday of this week. We also had Sunday just gone yesterday, where we did rally up to sort of 68k, but again, we've seen a push down. So with that in mind, what we're actually looking for is a rally up to this descending resistance. And again, if it fails to break in this critical zone, that's where we're looking for a liquidity sweep back down to 62k. And it's very evident to see that we're just under this compression and we're getting squeezed under this resistance, and we've got this horizontal level of support. So that's where that liquidity sweep lives, and there potentially could be a third point of contact back down in this level before attempting to break the imminent resistance at 68 to 69k. Now, there is an example, and with this in mind, we're going to zoom into Bitcoin on the 8-hour, where we do actually get the breakout sooner. So if Bitcoin does start breaking above resistance and tackling out of 66k, and then ultimately that 68k we was just talking about where we're getting rejected, then that's where we could see the push up to 72k. Now, 72k is the area we've also discussed multiple times in previous videos. We have initially swept into deeper liquidity since, and every time we've been there, we are seeing that positive reaction. However, it's just this descending resistance line. So if we do break out, you've got of descending resistance, you've got 68k imminently to break, and then following that, that could validate the push to 72k, right? That's scenario one. Again, scenario two resorts back to what we was looking at on the daily, getting that rally into resistance and then getting the liquidity sweep first, right? So on the 8-hour, that would be the scenario two, where we reject resistance again and actually reject back down for a deeper liquidity grab into that sort of 62, 61k area before looking for that expansion. So the key thing to note, when you zoom out to 2021 and 2025, there are similarities, but Bitcoin is still respecting the weekly order block at 60k, and this does have a strong potential to mark the low, which ties into these lower time frames and actually holding this demand zone at 60 to 61k. So it's critical that we defend this zone, otherwise the validation does open up towards sort of 50k for Bitcoin, which would replicate the bear market from 2021. So that's Bitcoin wrapped up, on the larger time frames, replications, the daily, the compression, and the lower time frames with resistance, and how important it is actually to break 60 to 70k to look for a market shift, a bullish reversal. Now, we're going to take this into our trading updates, and we're going to dive back into the ETH trade. I'm currently watching this one for a re-entry. I'm not forcing anything. If we break the recent swing high, that signals obviously bullish continuation of structure. However, if we break the swing low, then that opens the possibility for continued bearish momentum. So I'm simply letting the structure decide first. There's no guessing games here for ETH just yet. Now, following on to Link. Now, we stated yesterday about our entry at $8.80, and we was looking for a higher low potential. I did signify a fib demand zone, which was just below our entry point, however, still in our stop loss range. And this was on the Fibonacci between $8.70 to $8.50. Now, you can see we've had 2 points of contact where we've actually held support on the 0618. We swept below it, but we saw relief, and that did run up into the $8.80 sort of resistance, okay? So we have had a correction. We found support on the golden ratio where we was expecting it to bounce. It's now ran into the $8.80 neckline, come back again, and is still respecting the 0618. So simply put, we are respecting a bullish order block level, and we're, waiting for the inducement of this action before the expansion. We simply are holding the position for now. There's no emotional exit, even though we are down in this sort of stop loss sort of area, but it's just simple structure. As long as we respect fib demand, there is the potential to capitalize on the expansion here. Again, no emotions involved. We're just watching the data. Now, all right, guys, a quick update on our trading challenge where we're taking an account from $10,000 to $100,000, and our current equity sits at $11,161. That's a net profit of $1,161. 10 total trades, 60% win rate, 6 wins versus 4 losses, and our average win versus loss is $230 to $50. Now, all of the execution is monitored in Profit Precision on this exact dashboard. The link is in the description. You get 30 days of free access to monitor everything you do transparently. And of course, all of our live updates and execution for the trade setups and all daily updates can be found in our free Telegram. The link is connected below. So don't miss out on the fun. We're active in the environment. ETH, we're sitting back and watching. Link, we're in the environment waiting for that expansion. However, we're capitalizing day in and day out. So to summarize today's video, Bitcoin is representing similar structure to 2021. However, the weekly order block at 60K is the final defense line to invalidate the potential of a 50K drop, and the lower time frames are showing the compression, the levels of resistance on our heads that we need to break, with liquidity waiting below if we fail to do that. And also, again, the 8 hour of how important it actually is of breaking this descending resistance and looking for that push to 72K to potentially mark a local bottom during this massive range of consolidation. So I hope you've enjoyed today's content. I'll catch you in the next one. Stay safe. As always, take care.